Good afternoon. It is Monday, the 2nd of April, 2007. This is Brian Shannon speaking from Alpha Trends Blogspot. The markets closed. The Nasdaq 100, the Qs closed with a 6-cent gain today. And if you look at this daily chart, you can see that on here that we've got these last 3 days, we've got these long wicks or tails, as candlestick people like to call them. And today's action was an inside day, meaning that today's range was entirely within Friday's range. Typically, those come at a turning point. And the long tails suggest that while the sellers had control and brought the market down pretty low each of these last 3 days, it has recovered as well. Even though we've got red candles, I don't pay too much attention to the color of the candle. The market was up 6 cents, so that's bullish in my mind. Whether it closed above or below the open, to me, is kind of irrelevant. But the point is, we've got these higher lows the last 3 days, and it keeps probing this area that we've been looking at about $43.40 that had been the prior level of resistance, which now is becoming support. Now, you can see, obviously, it's not perfect support because we are probing it down in through it intraday, but it is able to recover and close above it each day. So that's the bullish scenario for this market. The bearish scenario is we've still got that declining 50-day moving average, but we've got the 10 and 20 heading back up. So realistically, when you look at the daily time frame, it's still kind of a mess in here. So we can't get too aggressive long or short. But when we do look at the intraday action, we're starting to see a little bit more bullish activity, and that is because we've got the again, these recoveries that come late in the day each of the last 3 days. So the buyers are taking control at the close, and to me that's important. We've still got a declining 5-day moving average, but again, I'm going to say that the important level is probably at about that 43.75 to 43.80 area. If the market can get back above that level, I think that will be bullish, and the market could probably take some bears off guard and head back up towards these towards this level near the 44.5 area or so. But we've still got, the market still has to prove itself in here. And as far as the Qs go, we still don't have that evidence that the market's ready to go. Now, I've outlined on Friday maybe that potential for an inverted head and shoulder. That's kind of ruined now, but the point is this downtrend line is still valid. So there's a good chance, or there's a possibility rather, that breaking this trend line tomorrow could be the catalyst for the move up towards this level right in here. Maybe it consolidates just under that 43.75, 43.80 area. The 5-day moving average starts to flatten out. Maybe it pulls back a little bit, makes a higher low, and then it can break out. That would be kind of ideal in my mind, but that's a lot of speculation as far as what might happen. Let's just focus on what is happening. We've got 43.20 looks like an important area of support, 43.30. Just above that. So those are the areas to keep an eye on. But again, 43.80, I think, moving above that level, things could get a little bit more bullish looking. Now, the S&P 500, we'll start with the 10-minute time frame since I've got it up here. But the S&P 500 is starting to look a little bit more bullish. You can see that the rate of descent isn't quite as strong for the S&P 500. We've got all these other moving averages starting to head back up now. So it's starting to look a little bit more bullish. We are holding above this little level of resistance from late Friday afternoon and early this morning, so that's good to see. When we look at the daily time frame, we've got kind of the same picture here as the Nasdaq 100, and that is that we've got this prior level of resistance acting now as support. And again, it's not perfect here, but we've been probing down through that level. And clearly, anyone who wants, who's nervous about this market probably would have sold on those sharp sell-offs, and the buyers are regaining the momentum. So it's starting to be more bullish in my mind. It's not time to be bullish, that is looking for necessarily higher highs, but it's starting to look like we ought to be considering the long side more seriously here. The picture is getting better looking, particularly on this 10-minute time frame. Again, the 42.50 level is important, and just above that, really 42.80 or so, 142.80. So that's where we are right now, and it's still, in the short term, confusing, but it looks like it's getting a little bit more bullish in here. So we do have reason to be hopeful, but hope isn't a reason to buy. It's a reason to sit on the sidelines or trade aggressively and wait for further evidence that the stocks are making the moves and that there's a good low risk, high potential trade there available to you. The IWM, the Russell 2000 ETF, is also holding above its prior level of resistance. That support is holding in there. And again, this is the more bullish market because we've got a rising 50-day moving average. And on the 10-minute time frame, we're getting similar look at where the resistance is. I'd say 79.85 up to maybe even 80 before we could really consider the buyers back in control. But you can look at this, and I was going to point it on the S&P 500 as well. It's kind of looking like a head and shoulder, maybe a double shouldered, but I don't want to read too much into that. If that is the case, then the height of this, we could call it about $1.50. That might measure up towards about 81.5 on the IWM. That'd be putting it up around this area on the daily time frame. So in other words, just below these really what are all-time highs. So it's looking a little bit more bullish, but let's really wait for the evidence to tell us that, anyone can guess that maybe it's going to turn, but if it doesn't, then then what do you have? You have losses. So let's wait for the evidence. Let's wait for that higher high, and I think above 79.85, 79.90 up to 80. That's where you really want to start to get start considering getting pretty aggressively long in here for a quick trade. The semiconductors continue to probe the lower end of this longer-term range that it's in, so keep an eye on those. They can often lead the market lower. Looks like maybe below 33.20. You might be a little bit. It'd be reason for concern basically in this market here. Let's take a look at the stocks we've been looking at lately. AQNT, we got in at 27.50. I'd suggest raising your stop to 27.70. So we're stopped out of that one with a loss of, or a gain rather, of 20 cents. FLIR, I tried to keep a conservative stop in here. We got involved at 35.30. I said raise your stop to 35.35, so we're stopped out with a gain of 5 cents there. MGAM, we also got involved on Friday at $11.90, and I suggested raising your stop to 11.77, for which we were stopped out with a 5-cent loss. A lot of stops today. IMMR, this one didn't get stopped out, but I said you want to buy it above $9.10, so should have been involved in there. The stop was originally going to be $8.95. Let's move that up to $9.04 in IMMR. Also LPNT we looked at over the weekend. We wanted to see a pullback to 38.05. Pretty much that occurred right down, I guess, in this area, and then to buy it on strength above 38.15. Then our stop was going to go at we're 37.98. So we were stopped out of this one with a 17-cent loss. We also stopped out with a small loss in Zebra Technology, ZBRA. I thought that getting above 38.75 would be a good place to get involved in this stock, but I also suggested a stop at 38.48. That occurred right in here. So we were stopped out of this one for a loss of 27 cents. QUALCOMM, we weren't stopped out of. We got involved in that one above 43 bucks a share. So I would say now you want to raise your stop to 42.73 in QUALCOMM. And ACF was a short sale. We had wanted to sell it short below 22.75, so we should have been involved in here. Our stop was going to be 23.03. Let's leave the stop at 23.03.